Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts.
It's more comfortable on the euro, really more comfortable, because you break above the bearish channel. It's clear that for the moment, it's a pullback for now. So we are more comfortable on the EII, sorry, the dollar against the euro. Next one, the Australian dollar. The Australian dollar appears like a tricky configuration like the Canadian dollar, but we have some interesting developments. For now, looks like a rounding bottom, but is becoming less and less like a rounding bottom. But the official scenario for now is still shape. Is that the Australian dollar is shaping a rounding bottom. The pivot point is clear. Is the previous low at 106. And the key level, like for the Canadian dollar, 114. So the risk reward for now is very interesting. We are close to the pivot point, but the reward risk ratio is not sufficient to take a long position right now. The more comfortable situation would be an upside breakout of 114, as we could say that is a rounding bottom, but for now just tentative rounding bottom. We have a lot of the tentative words, but since it's just a tentative rounding bottom, we are bullish, but we don't take any long position for now in your trade alert. It's too risky at this stage, especially as we have not really indication on the RSI, except maybe this horizontal level, but it's too weak to enter a long position on this kind of configuration. But it's not a reason to take a short position because we didn't the pair didn't break below 160. So you have to wait, like for the Canadian dollar, as long as you take a short position, you buy a put below 160 and you buy a call above 140. You can see also on this pattern double top. I'll draw it for you. Okay. The neckline was clear. The neckline was just there. Okay. And you can see after the downside breakout, the double top is pretty beautiful because the neckline is perfect. It's flat. And the timing is really good. Okay. So when the pairs have broken below the neckline in April 2009, around 137, you can see that the pair went lower, bearish acceleration. So the double top on there was really, really, really efficient. So for the Australian dollar, we have to wait for now. The next one is the Mexican peso, PZO, US dollar against the Mexican peso. For now, we can draw a bearish channel. Okay. The pair is trading close to the lower boundary, sorry. And you can see that on the RSI, the low on the RSI are higher, so we can say that the downward momentum on price is less important that when we are maybe just there. Okay. So now we have a clear pivot point just below the lower boundary of the bearish channel at 125, and the target will be set at 135.50. Yeah. Okay. So even if the pair is trading within a bearish channel, we prefer to be bullish as the pair is close to the lower boundary, and as we are bullish on the US dollar in general. So our preference is a bounce above 125 to target 135.50. On the other side, maybe okay, it's not perfect, but you can see that the downward momentum is declining. Okay, that's it for the Mexican peso. The Swiss franc is the same configuration as the euro, as the US dollar against the euro. So the ticker symbol is SFC. You can draw a falling wedge and not a bearish channel, because the upper boundary is declining and not parallel with the lower boundary. Okay. And the US dollar against the Swiss franc is pulling back to an interesting support area. You can draw on the RSI a bullish trend line. Sorry, I have a technical issue. Okay, it's okay. So you have a bullish trend line on the RSI. The pair has broken above a falling wedge. It's a bullish pattern. So now we think that this pullback on the US dollar is very interesting to enter long position, to buy calls on SFC, and we can set the stop loss at 100, just below a key support. The first target is set at 105, and the second target, in case of the pair breaks above 105, will be around 109.50.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.